Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on today's show. I guess we're going to buy everything. We should really buy gold. It's at a new all-time high. I can't believe I'm saying that. We'll talk about that. We'll talk about the rallies in gold, silver, Bitcoin. Tech is going to take center stage this week between earnings and between the testimony that the Big Four CEOs give on Capitol Hill on Wednesday. We've got a new SPAC in play. Tesla's moving this morning. Moderna's moving this morning. So a lot to get to. Our guest is Scott Shellady, a.k.a. the Cow Guy. He would join us at 8:35. Before I throw it to Joel, I want to remind you folks to like the video, subscribe to our channel. We appreciate any and all likes and subscriptions. And now, Joel, update us here on this overnight session.
Good morning, Spencer. Good morning, team of traders and investors. We are in the green by 18.25 handles. We have the support level of the century, folks, and this is a 3190 area. I talked about it last week. I also talked about it last week, I don't know how many times, but we got down to 31.92 overnight, and then boom, we rebounded. 32.2375 is your pre-market high. This is a tough one, folks. Weekly level, I'm going to give you 32.27. We clear that, I think we have a good shot at getting back up closer to 3,300. Friday's high 32.39 if you're looking for an intermediate target. So right here is the real battleground here for the bulls to take control. They're doing a good job. As I said, we're up over 17 handles. Gold, now on a rolling front month contract, it's not an all-time high, but boy, oh boy, adding $34 any way you look at it, got up to 1941.90, traded just under 1900 as a low. So breakout, I mean, you got to be thinking about gold 2000 here. Finally, those miners I have are finally paying off. Silver's the star, up 6.75% at 24.40, up $1.55. Another clean breakout in the silver market. So those gold and silver bugs are finally getting their due. And Bitcoin, don't forget about Bitcoin. The trading range between 9,000 and 10,000. It could be a thing of the past here. We are up $735 in Bitcoin, 10,350 on the futures. Finally, a move. Let's bring in Triple D. Triple D, first let me ask you, how was the weekend?
It was okay. Pretty good.
Yeah.
Little R&R.
You watched some baseball?
I took an extended weekend because I took Friday night off. I never do that. Did not trade Friday night. Last Friday night before it was pretty slow. I was like, you know what? I'm going to take an extended weekend. So I did not trade Friday night. So I had a normal weekend, really, because everybody always quits at 4, but I don't quit till 8. So I took Friday night off. So I can't tell you what was happening in the equity markets on Friday night, although I did look at my phone a couple of times. And I didn't see much happening. So it was good. How's your weekend?
Very good. I mean, it's actually coming back to work is like a vacation. I was just so busy this weekend, swimming, swim lessons, doing stuff.
I did some swimming too.
You did in a lake?
Yeah, a little bit in the bay over at my brother-in-law's. Swam over here. He's got a swimming pool. So the kids it was hot. I don't know, obviously down Detroit is hot, and up at my cottage, very hot. So it was one of those hot weeks. It's hot this morning too. We are right in the thick of the heat here right now.
All right, people don't want to hear about our weekend. They want to hear about stocks. And we got a lot moving this morning, right? I mean, Moderna's moving. You have Tesla itching its way down to $1,000. Got a lot going on. Where would you like to start?
I mean, we should start with a little recap of what did happen Friday morning, and the textbook 2-day sell-off just followed the textbook. What we talked about on Friday morning show was if you're going to see the buy the dippers come in, it's probably going to be slightly after the open. So you get the washout at the open, bring up the chart of Apple. You can show it on all time frames if you want, but
Yep.
obviously we're looking at Apple just mainly from Friday. And if you see, we talked about the 2-day sell-off on Friday morning show. The follow-through happened in all the tech. They were hitting them in the first 20 minutes, and then the washout happened, and the buy the dippers came in, and they bought them all day. So this was a classic 2-day shakeout. Is it something more? I can't tell you that. We obviously just trade what we can trade. We trade those setups, and I know, I talked about coming in short, individual tech stocks in my day trading account on Friday because I expected the 2-day move. It's tricky from this point in time, but you look and you say, okay, I got to come in here this morning and start buying stocks. I'm going to say it again. If you're coming in and buying Apple right now, you're doing it backwards, because Apple is now, if we look, almost 20 points off of the low that it made Friday morning. So, and getting almost half of its losses back. I mean, if you want to talk a little 50% retracement of the most recent move, you're almost there right now, because you say roughly $400 got down to 356. Now we're up to 374. You could call it 378 to 380, but you're kind of coming to resistance as you start to get back up there. So I'm not giving the green light to day trade and start buying and loading up tech stocks here now. If you were wanting to buy tech stocks, and I own all these already, but if you're wanting to, you've got to be buying them on dips, not buying them on rips. Apple trading up $4 here this morning, maybe because some Moderna data, maybe because they just find a reason to come in and buy, but it's going to be a lot of chop in here. It's not going straight back up to 400, I think. So I think you're going to get maybe even a second chance at that 356 low. So I'm not chasing today's rally.
Interesting. I mean, you talked about the bounce, 397. We got to 356.58. Call that a 40-point move. So 377, 378 gets you back halfway of this decline. So that if you're playing for just a short-term target, or you're looking to initiate a short, that's halfway back. No daily levels fit in there because we came down so hard. Just one thing, though. Pre-earnings run, right? Don't they have earnings next week?
That's what I was about to say, Joel. It took the words out of my mouth.
Yeah. Go ahead. I think it's this week, isn't it?
It is big tech earnings week. So it starts Wednesday morning with Shopify.
Yeah.
Wednesday afternoon, Facebook. Thursday afternoon, Amazon, Apple, Alphabet. So it is
huge.
The big tech earnings week. And on top of that, on Wednesday, you do have the testimony that the big four CEOs are giving in front of Congress regarding antitrust activities. So that could also weigh on sentiment or determine sentiment here. So 2 catalysts this week for tech.
I mean, the earnings are everything. Can you see a little pre-earnings run in some of these things? Well, you started seeing it Friday, so it is possible. Could we chop around before the earnings? I think we do. I think we chop around because we obviously want to see, are they, gonna, pull a Microsoft where the earnings were okay, but then slam the stock anyways, or, on Tesla, obvious example where the earnings were good and they slammed the stock, or are they, knock some of these stocks down enough now that the sentiment has turned a little bit and they can actually buy them up. That's all to be determined here. So we'll have to look at the earnings earlier in the week to get a better feel for it. But I mean, Thursday's the big day. Amazon, Apple, how do you get bigger than that? That's going to be the real turning, and that's the real test for tech.
All right.
Good question from the chat before you move on to
sure. What do you
Gary
got?
Francis in the chat saying, what is your signal that the dip is over and it's a time again? How do you know to buy a dip when the dip can go lower? I'm going to say, when I'm saying it's general, buying the dip and selling the rip. So if I have a setup and I'm in a stock, so first of all, let's just go right back to the basics. When I'm trading, and I'm putting the trading cap on, not the investing cap on, the trading cap on right now. When I am trading, I am buying stocks in uptrends, selling short stocks that are in downtrends, and I'm buying those stocks on dips and selling the other ones on the rips. And also, maybe taking some profits, so buying dips and selling rips. If your stock's in an uptrend, I'm inclined to buy it and then sell it on when it bounces back up. Now, again, it's a great question. How do you know? You don't ever know where the bottom is, but you've got to know for those turns. Like I was talking about, it was a kind of a classic 2-day move on Friday. And so I was saying after the open, you could see some life coming in. So if you're a day trader, how you would have traded Apple is, boom, you get the washout low at 356. You're not trying to catch the bottom. Don't catch the falling knife. I'm not saying, okay, it's going straight down. I've got to just buy it. Wait till it stops going down. Then you have yourself an out. Then you have yourself a defined thing. So the time to buy it, wasn't at 356. So you got at 356, you just got lucky. The time to buy was when tech started to turn around shortly after that. And they started to look, okay, now we're rallying. Now we're up 3-4 points from the low. Now, if I'm a day trader, I can stop myself at the low of the day. And I'm just going to say that the rally is going to continue. That's how I would trade if I was a day trader. If you're a long-term investor and you're looking for opportunities, you can catch the falling knives on some of these, but it's tricky and I get burned. I usually like to have the momentum going with me. So I want to see them start to go back up a little bit. So I'm not trying to catch the absolute bottom. I'm trying to let it wash out and then come in after everybody's washed out and it looks like there's some stabilization happening. So that's how I play it from a day trading perspective. Investing, again, is a different animal. So, if you're wanting a stock and you're seeing it just gets murdered, I mean, some people were buying the Intel dip, I'm sure. We talked about a big level at $50. So sometimes levels can come into play. Was trading 52 in the pre-market. I said, I think it could see 50 today. So you know what it did? It actually bounced just below 50, 49.5. Hits the few stops that are people maybe leaning on 50 and goes back up. I also said I wasn't adding this to my investment account until I got to 45 because I think it was significant enough information that it could stay out of favor for a while. So as a day trade, it would work from 50 for a bounce. As a long-term investor, if I switch the caps again, I'm not really looking for Intel until it gets to that huge 45 level, which has been huge for a long time. So we're using levels, we're using the switch of momentum, and we're also just using the overall trend. Intel's not an uptrend anymore. That's the one problem with, even looking at Intel as, oh yeah, this is the stock I want to buy on the dip. I mean, Intel hasn't been really in an uptrend for 2.5 years. I guess if you go back 7 years, it is because it was down at $20 in 2013. But when you look at the last 3 years, it's just kind of hanging out between 40 and 60. Every time it gets up over 60, it's a sell. Every time it gets in the mid 40s, it's a buy. So I'm going to keep playing Intel that way. It gets down to the mid 40s. That's where I'll strike $45, $46.
Just one other thing, just talking. I mean, you're talking about using the levels, the intraday levels. I think what we've talked about in the past is also the importance of the open, right?
Mm-hmm.
In Apple, you had the lower open. You continued through, right? But when you came back, and we don't have time to drill down on all of it, but when you came back down through that open,
up through
boom,
the open,
yeah, up through the open there. You had a nice run, and that's a lot to lean on, buying it at 63.95 and leaning on 56.58. But it's just nice the way Apple went up, and you could have gotten the close in Apple on Friday if you would have been patient. The close was 71.38. It got to 71.88. So there's just a little bit more of a tactical way to approach it on an intraday basis.
And completely agree with this. And just to explain this, I learned this from Joel Elconin back in 1999. Stock opens, washes out, comes back up through the opening price, then you strike, putting your stop at the low of the day. Apple might not have been the best example, Joel, because like you said, the stop would have been 9 points away, but I'm sure there were some tech stocks that probably were better. And if you were looking at Intel from that perspective, you would have never had a trigger. So you would have never got burned on the Intel because Intel never came back through its open. It opened around 52 and then went straight down and actually came up and touched the open, but never got back through it. So if you were playing it from Intel, you would have never bought it and you would have never got burned. So it works, to stop you from going into trade as well. But if you're just randomly saying, I'm catching the falling knife, oh, Dennis says buy the dips, I'm just going to randomly catch the falling knife on this. It's difficult because you could be trying to say, okay, well, Apple's dipping at 374, now it's 356. So where is the dip? How do you define the dip? So again, you've got to have those setups, your ducks in a row. But overall, I'm buying the dip on stocks that are in uptrends, selling the rip on stocks in downtrends. And then you've got to that's one duck, and you need to get your 2 or 3 ducks in a row to actually strike on the trade. I love the Joel setup where it starts to come back up through the open, and then you have your defined risk, and then you can stop yourself out at the low of the day. That's always a nice clean setup.
And then also just going back to this Intel, and I pulled up if you look at the upper left chart there, when we were discussing it during the show, I mean, like that spike to 53, I don't know if that was an odd lot or whatever, but it just looked, like there was a seller in there and they weren't done. When you're at the pre-market low, I think the pre-market low at the time was like 51.90 or 52 even, and it was at 52.20. And it ain't going nowhere. I mean, you could feel that pressure. You could feel someone was just like, okay, I'm selling a zillion at 52. I don't know whether they were shorting it or exiting a position, But when you see those, sometimes you see those pre-market charts and you hit 52 and then you're at 54.5. But that wasn't the case. So I remember talking about that. You see the flush out early, and then at 10 o'clock, you got the old 10 o'clock turn and it rallied back. So how is Intel? Take a look at Intel today. It's trading up 24 cents.
It's not really participating.
Yeah, not participating. You got to get into that gap area. You got to get
before you get interested. I completely agree.
Yep.
Not interested in this from the long side, even from a trading perspective, until I can get up over 52, and then it gets a little bit more interesting. But let's be honest here. I mean, when AMD, and let's go to AMD right now, because when it just kept running, and I did not think it was going to have the gas to keep running like this. I was saying on the show, it was trading 63 in the pre-market. I was like, I'd be ringing the register. Dead wrong. I mean, the thing just kept going. So Intel's losses, AMD's, and AMD this is all-time highs. And like I said, I never want to be short a stock making new all-time highs, so I didn't short it. If I was in it, I would have been selling into it way too early. Again, maybe you follow me on the entries. I've never been great at exiting stocks, but that's an incredible move. It's a gift, but now it's so in favor.
I don't even know what
on buybacks here. People, on pullbacks, people are going to be buying this. So again, as a trader, this is a stock that I would be buying on dips now because it's back in favor. So maybe you get it, and where's the dip on AMD? I mean, 69, go down to 65, 66, 67. Those are all dips. I don't know how far it goes down. It's hard to really define the risk here on a stock like this at this point in time, but maybe you get some intraday, maybe it opens and cuts down, then cuts back up. Like Joel was saying, there's different intraday setups that we can't discuss here yet because the intraday hasn't even started. But overall, this is the kind of stock that I would be buying on dips when I've got a clean setup.
How would you approach Taiwan Semi this morning, TSM? Because that is also moving. Intel's loss is AMD's gain, and Taiwan
Semi, yeah.
Gain. So,
and they have Apple news too with them, do they not?
Right. They announced an expanded partnership with Apple this morning, so they're at new all-time highs here this morning.
Yeah.
Unlike AMD.
I mean, same story. I don't chase something that's up $4.50. I wouldn't have chased AMD, although it would have worked on Friday, and maybe it works here too. I've just been burned chasing too much, so I don't chase these things. But this is a stock that's in a clear uptrend. It's been ripping. It's almost parabolic at this point in time, though. So it's kind of like, and maybe AMD was the case too, when it was ripping up $5, $6, $7. It's the case a little bit Nick Shaheen, too high to chase, too hot to short. So I'm kind of just maybe out on this one. Joel, I want Semi up $4.50.
Yeah,
it's a hard one to trade at this point.
Yeah. Also, you're not looking at the primary market. If you want 79.70, hit that at 4:30 this morning. Sellers slammed it to 79 or 77 even. So keep an eye on that pre-market high, 79.70. Also, just for clarification here, the chart, upper left chart is your 15-minute, 24-hour chart, then your daily, and then your bottom left is your weekly. And then just keeping the SPOOs up on the bottom right, since we use that as our primary indicator. Also, we had a suggestion, if the charts are blurry, we're still looking at that. You can change your resolution from 144 to 720.
They're crisp on my screen.
Yeah.
We might have to, and this isn't set in stone. We're just experimenting with something. We can go back to the one chart system because maybe it's a little bit confusing. I mean, I get somewhat confused looking at these four charts. Now that you explain them, I get it a little bit. So we're experimenting a little bit. So let us know. If you like the new chart setup, we can go with it for a bit. We can go back to the one chart system. It's not in stone. So let us know what you think.
Oh, you can just look at our ugly mugs all day if you want to do that too. And, we can smile a little bit more. But S&P's
I don't smile enough, they tell me.
Yeah, S&P's. I mean, people do like to see your new news, when your hair is going all over the place. It's called the Triple D. It's
it's called, Joel.
Triple D.
Lack of showering.
Hair indicator. We got a lot of indicators.
It's the lack of showering here.
Not much on earnings, except for Hasbro. I know we had Mattel the other day. I mean, are kids playing with toys more since
Apparently
they're in lockdown or not? What do you got for us on the earnings front here?
Bad miss for the EPS. 23-cent estimate, 3-cent actual for their EPS. Sales $860 versus $995 million. So strong misses on the top and the bottom line. Though they did note that gaming revenue increased 11%, which actually seems low to me.
Didn't make it up.
No, not enough to make up the losses elsewhere.
I mean, this is still a reopening play. Yeah, you can buy Hasbro toys online, but I don't think people are, really thinking, because they're still, think about this. Think about the logic of this. And maybe we should have thought of this before the Hasbro earnings, but we never even talked about it. I don't think of Hasbro very much because it's not a stock I actively trade. But the people who are buying stuff online aren't kids. It's the adults, it's the parents. When you buy a toy, you're going in, your kid's in the toy section. I know, because I got 2 kids and I know how it works. I don't actively go in the store looking to buy a toy usually. I'm going in the store and I'm like, okay, go play in the toy section for a bit, because, we divide and conquer. Laura will be doing some shopping. I'll take the kids to the toy section just so they can, destroy the place pretty much. But I mean, and then they got some, I really want this. And you're like, oh, no. And you're trying to talk, I want this. And then, the kids want. They buy things on impulse that they're seeing the toys. They got the Barbie doll, Hasbro. They bought the Barbie doll, their Star Wars figure, and they're buying it on impulse. They're not online shopping looking for it. So it's maybe predictable that online shopping isn't going to work that well for Hasbro. They need the kids in the stores where they're playing with it. The parent sees them playing with it. Oh, they like the toy. Okay, well, whatever. It's $10, buy the toy. So I think that's the big difference here. At least that's my fundamental thinking with Hasbro as to why online shopping doesn't work as well for them.
You did get a dip and a spike here. Now, this is opposed to that Intel chart the other day when, we looked at it and there was pressure. This went to 68 even. And now you rallied almost $4 up to 72. So this one, I'd be more inclined to say, okay, I think I missed the low of the day, 68. I mean, it very well could happen. You go to your dailies or switch right over to the right. Look at this. Pair of lows, 69.
No, we're not seeing your charts. You got to park.
Oh, the old switch. Okay, we'll go to the charts here. And you will see the pre-market low, right? You spiked you went to 68 even, $4 rally. I'll go to the dailies here and I see a pair of lows, 69.33, 69.44. That's what I would say. Okay, I don't think I'm going to get the pre-market low. Let's see if we can get to this double bottom here. This was back at the end of June. As far as continued on the upside, you've hit 72.21 on the current rally. Yeah, light volume. I mean, this thing can go anywhere, but
it can.
Hard to find resistance. If you're looking to cover short or maybe nibble it along, I like that. This is called 69.50 area. But besides that, stock's kind of in a downtrend, right? It was over $120 in October.
Yeah.
2-for-1 stock split. I don't know.
Yeah. I don't want it. I mean, what's the story here? Is there a story that's going to carry this?
Toy Story.
It's not sexy. It's not going into any funds. I mean, so you're not going to have, the funds coming and buying on the dips because they need to own these things. I don't see any reason to own Hasbro here whatsoever. I'm not saying it's the next Mattel, but obviously Mattel's been holding on. I mean, but it's been in a downtrend for years. But I'm not saying it's not either. I have no interest in Hasbro here.
Okay.
I just don't see the catalyst to really drive us higher. I mean, they got the Star Wars toys. Star Wars films are getting delayed.
That's what I was just going to mention. That
I don't see the pending catalyst that, hey, we got to own Hasbro because this thing's going to rip higher. It's a reopening stock. It is a reopening stock. It's not like a Boeing or American Airlines is maybe teetering on major issues if we don't reopen. But it's still a reopening stock. It's not a tech stock. Anybody who says that, I don't get it. So no, I'm not interested in Hasbro. I honestly would.
Who says Hasbro with the tech stock? I've never heard that before.
Well, because they're playing. Well, I've heard. I have. I mean, not saying that they've got different.
Okay, whatever you say.
I'm saying it's not. So I agree with you, Spencer.
Okay.
But I heard somebody saying that before. Oh, they're using new technology and they're doing different things and they're moving into gaming. The gaming aspect of it, I think, is where that argument's coming from. But like you said, the gaming revenue is only up 11%, and perhaps the best quarter for gaming ever. So, to say that, I can't see it either. So I'm not interested in Hasbro, bottom line.
Let's go to Tesla next. Our old friend Gordon Johnson was on CNBC a few minutes before we went on the air here, and he was just reiterating his bearish case for the stock. I'm wondering if you guys can maybe point out any potential support and or resistance levels. If this thing, I guess it has resistance now, but in Tesla, it's come back here a ways.
It's gonna get added to the S&P 500. I wouldn't be surprised if that happens soon. So that's why I don't want to be short the stock. Just saying, and I did say it could go down on that, but it's gonna pop. It's probably gonna pop on the initial announcement. I think that pop, it will be the selling opportunity. So I'm kind of waiting. I think that Tesla announcement could come, and I think it could get like 100-point initial pop on the announcement that's actually added to the S&P, and I think that's the selling event. So that's kind of what I'm waiting for, is that pop off the announcement that's getting added to the S&P, and I plan on selling it short. So into that pop. That's the way I'm trying to play it. It's going to be a wild trade. I'll probably do it with only, not as much size as I normally do, because it is going to be wild, and I will be fading the move. I think it does get the initial pop on that. When that happens, I don't know, but the stock broke trend. The stock has a story. I'm saying the story is still valid. The story could get hot again. And I think it does have a catalyst with the S&P that's going to get the pop. I don't think there's going to be follow through on that pop though. So, but I guess, anything can happen. So you've always got to have yourself an out. So if it pops up hypothetically, like into the 1500s, then I'd probably stop myself out. 1689 is a long ways to go. So it's going to be a tricky setup. I'll probably be an intraday thing where I'm looking, where's the high, let it pop, let it go up where it wants to go, and then maybe use that high as the out if I'm trading it. But I think there's going to be an event here. So I don't want to be short it right now, because it could pop 100 points in your face tonight or tomorrow or the next day on an S&P ad, because that's coming. They've hit the criterion, it's coming. That's going to be the catalyst. It's just a matter of if enough people burned in it right now that they're going to fade that pop. I think they do.
On Friday, we're assuming some more follow through on the downside, and I took a look at it. It's hard with these $1,300-$1,400 stocks, but it did identify on the show a pair of lows between 51.28 and 13.76. So I mean, we're just trying to spitball an area. It fell right in between there. It went to 13.66.54. You would have had to been out there scaling and get anything near that area. But then this morning they hit it a few times too, and they got it down to 13.75. That's your pre-market low. So, I mean, if you think this is like a turnaround here, and this is it, this is the end of the sell-off here in Tesla. We're going back to 1,800 or whatever. I mean, to me, you got a good level. You got Friday's low. Also, it tested it in the pre-market. So if you're talking, where are we at it? 14.8, 14.10. I mean, if you're so inclined to risk 50 points on a swing trade, which you almost have to do in Tesla, give it down to that low, and then maybe you get half of this break back, right? What did you hit?
If you get the S&P ad in the next couple of days, it could pop that $100. It could. Yep. So you're risking, but again, the timing of that, we don't know when that's coming. We know it's coming. I'm telling you, it's coming. We just don't know what day it's going to be. We don't know. A lot of times they do them on the Fridays, but they can do it whenever too. So, and this is a lot of hunger for this to be out of the S&P. I think they do it sooner than later. So I don't want to be necessarily short this and then it rallies 100 points in my face. I'd rather sell the rip. But I think that high of the move, 1794, is going to be the high for a long time. That's just my opinion. Some people think it's going to get out of the S&P, and there's the indexes that got to buy 26 million shares, and they're just going to continue to buy this all the way up to 2,000. I am not in that camp. I'd be a seller of the rally. When it gets out of the S&P, I'm leaning to sell it. Nice. Selling it short. Yep. So, and that, I don't often short Tesla, and I don't stock, and it's a strong stock, but I don't want to be a little short it right now, because I think there's a 100-point pop when that thing gets announced.
Yeah, what if you had a 429-point break? You take half of that, you add that to the 1366. I mean, 1580. I mean,
I'd love to get shorted at 1580 and lean on the 16. You got to give yourself 100 points, but you're gonna have major resistance anywhere up near 1600 on this for a while now. You got some people burned.
Yeah,
people bought that stock on that earnings, saying this is it, we're going to 2,000 because now it can get added to the S&P, and they are immediately down 250, 300 points from those highs that it set on Thursday. So that is telling you there is overhead supply. Classic, rule. Who's caught? A lot of short-term traders caught in this thing right now. I like to be on the other side of the crowded trade. I believe this is still a crowded long, and people are holding on for that S&P ad. And I think they get the little bit of a pop. And if they're smart, I believe they're going to sell into it. If you're a long-term investor in Tesla and you're in like Joel and Jason from like the low, talking, low
Under 5,
digits, under 500, Jason Raznick like 40 or 50. Well, you're probably riding all this out and you're believing in the story. And I don't know where Tesla is 3 years from now. Maybe it's a hell of a lot higher. But as a short-term trader, I'd be booking profits into that S&P ad. I mean, I've said it 5 times here, so you know where I'm at.
The Barron's had things on electric vehicles was the cover, and saying, hey, there might be a little too much enthusiasm for it. Workhorse has come off that high, couple red candles in the last 2 weeks, managed a green candle last week.
Yeah.
What else is there? I don't know. I mean,
There's Nicola, and the CEO will be on our show tomorrow at 9. So.
Okay.
Nicola has just been rocked. That's due
Wow.
for a bounce just because it's been hit so hard.
Whew.
I mean, wow. People saying EV, you got to buy everything $93 and it was worth more than GM or something. Somebody told me. I don't know if that's true or not. I never looked at the market cap, but they've never produced a vehicle and they're worth more than General Motors. But that's the kind of market we were in when it got up to $93. Now it's down to $29.30. So at a certain point here, you think this down to $20 probably does. It's due for a bounce. You're short, and now you're way late to the party. Like there was a lot of times you could have been short Nikola. Now I don't know when it's up $2 here this morning, and maybe there is broken trend and things going in a downtrend here, but there's still a story potential.
I'm actually surprised to see it fall this far, because usually when you get stories like this, and
stay hot for longer.
Yeah, they stay hot for a little bit. This one really
cooled off fast.
Yeah.
It got so hot though, like May and June. I mean, this is $10, $13. Obviously, it was SPAC back then, and maybe we didn't know what it was going to be. And then obviously, the news comes out, and it's going to be electric truck maker, and everybody's like, "Oh, EVs, everything," and they just got crazy. I mean, in a few days, in June, it went from $30 to $90. That's called upside capitulation, and that's the time to book your profits. So, but I'm interested to hear. It's CFO we're having on.
CEO.
Oh, we're getting the CEO, so it'll be awesome. It's Tuesday, tomorrow night, tomorrow morning.
It's returning. It did return to the scene of the crime, and what I meant by that is you broke out on June 8th. You had a gap, right? This was on the daily chart. You came down and you filled that gap. You had, in order to do that, you had to get to more than filled the gap. 35. Where was that big gap day here? $36 filled the gap. You more than did that. You got down to under $30. So gap fill, maybe get some kind of bounce in this thing. I don't know. I mean, you can lead on that low from Friday. Yeah, 29.23.
If I was day trading it or swing, I would be exactly, Joel, leaning on that low from Friday, 29.23.
Why not? Take a shot here, or even a little bit more.
It's not a bad shot. It's due for a bounce. But again, you're coming in now. It's been going straight down. Now you're buying it up 5% this morning. I'd rather buy it at 30 and lead myself out at 29.23, and I'm only losing 80 cents. Yeah, chasing it up $2.
30 was a good. I'm looking at. I mean, I wasn't looking at this on Friday at all, but
I never did either.
Yeah, I mean, but look at 3 lows in a row. June 1st, 30 even. June 2nd, 30.67. June 3rd,
big number.
30.08, 31.25. So someone bought maybe not trying along there, but man, if you had a shot, also like a whole, like a round number, $30, right? 35, 30. A lot of times
work.
You're going with the Kenny Glick. This is kind of in reverse. Looking for those, just the fact that it's a whole number, nothing else. Even if I would have said there weren't any lows at that area at 30, it's just psychological. I mean, and that's what a lot of the market is, a lot of trading. It's not so much, having your point and figure chart and, and on the 1 minute and your tick chart and they're all lining up. Sometimes it's just like common sense. Like, wow, this thing was at $94. Now it's at 30. That's a nice round number.
Well, why do whole numbers work too? It's because the optionality at those prices. People are intrigued to buy numbers of big whole numbers. Now, if I go look at the open interest on the put side, and the puts, because there's potential buyers with puts, right? So, when you got a lot of people who own puts, they can buy the stock against those puts, lock in the gains. So if you're looking at the puts, 21, I'm looking at, the strikes. So 3,000 open interest on the July. So this is the ones expiring this week. 3,000 contracts on the 40, and then the 39, 296, the 38, 661.
There you go.
There is some on the 37, but there's 2,179, so that's kind of an outlier. 36, 507, then the 35 jumped up to 2,818. Then it's 310 at the 34, 664 at the 33, 387 at the 32, 420 at the 31, and then 2,575 at the 30. So it's 10 times more in the 31. So what happens is, if you've got puts on this puppy, you can say, and option makers might be saying, okay, well, these are turning points for it. These often get to turning points. You start getting below that, and the open interest starts to drop dramatically. And that's just looking at the Julys. We look at the August, and there's going to be strikes at 30 as well, that are bigger. And they stand out like a sore thumb. 874 contracts at the 30 compared to 47 contracts at the 31. So this is the fundamental reason behind why stocks turn at big whole numbers, because there's a lot of people who have open interest there where they might be trading against it. The August 14th 30s have 2,199 open interest on those puts. It's a crazy amount compared to only 12 on the 31 for August 14th. So you can just say there's a lot of people sitting with $30 puts. And if you just believe that the options like to expire and cause most pain, 30 becomes a support level, because there's so many people who are in the money once it gets below 30. So I like the 30 level for that reason, only that reason, that there's a lot of people who would be making money if this thing falls through 30, and those options don't like those people to make the money, at least those option writers.
All right, 8:37. I want to remind you folks, hit that like button, hit that subscribe button. We appreciate that. I want to bring on our guest now, Scott Shellady, a.k.a. the Cow Guy. He is joining us now from wherever he is quarantining. Scott, good morning.
Good morning. How are you?
Doing well, doing well. You agree with that whole assessment right there of the fundamental optionality of stocks and why that leads to stocks trading around whole numbers?
Yeah, I do. I also would say that because stocks have this gamma, and that's a word that we don't need to go into, but you're going to be seeing a lot of those folks that are along those puts when we break through those strikes are going to be covering, because they're naturally going to be short at that level. And that also tends to give the market some support there too. So just knowing what they're going to have to be doing with their position also helps in those situations.
So Scott, what are your thoughts on the metals here? I mean, gold and silver. What do you do now?
Well, I mean, I think you guys talked about it earlier. It's probably a little bit too late to get on that boat. But
is it though? It's 2020. Anything can happen.
Yeah, well, here's what it's telling me. It's telling me that the market's nervous. I mean, you get out of bed in the morning, you take a look at gold, makes you think the market's nervous. Then, we start to talk about how well the economy is doing, which I don't think it's doing that well. And I look at the 10-year yield at 0.57. How well are we doing if that's the 10-year yield? Now, we've had a lot of housing market chatter because the 30-year went under 3%. Was the 30-year going under 3% a good thing or a bad thing? Because last I checked, we don't see rates tank when things are doing well in the economy. So this whole idea of the V-shape, I think, is way out the window. I think we're going to be in this for lower for longer, and it's going to be a problem. And I think that's where these metals are catching a bid. I think that that's not a bad place if you think that the stock market's overdone. And if 1% of the stock market or 5 stocks are leading around the other 495, I can see where that gold gets a bid then.
Yeah, I mean, there are fundamental reasons to like safety assets here, but also how do you go into gold right now after the run that it's had? You can look at that chart and get a little queasy, just being like, how do I chase this? So it's in one respect, it's almost a lose-lose in a way for some people. But
it's also gotten a little bit of a boost because we've seen, the dollar has been in that 96, 98 range for the DXY for a while. And then we've finally broken through to the downside. And I think that's also helping. Those dollar-denominated assets are going to get a little bit of a boost. I mean, not all of them. It's not an automatic, but that's also been another double whammy for gold. So if you're nervous, if you don't like stocks, and you think the dollar is getting cheaper, I mean, that's a great place to go right now. I'm not a massive gold bug, as you can tell. I think there's 2 reasons to buy it. If you're worried about inflation, you want to park some dollars there. But you know what? We've been trying to buy inflation since 2008. We just don't have it. Okay. And number 2 is
but this time is different though, Scott. This time is different.
Oh yeah. Okay. Just like your second and third wife is different than the first and second.
We're on the line with Scott Shellady, also known as the Cow Guy, head of USTC, U.S. over-the-counter producers for Merrick Solutions. Let's just talk broad market here. I mean, I really feel we're at really an important inflection point in the market. Nice high last week and pulled back near the end of the week. You know, the tech brought us back a little bit. Didn't make that new Friday low, but man, you got a support level at 3190 the S&P futures that it's hard to be anything but bullish until you take out that level. Going back on the upside, of course, 3283 and change was our high from last week. Just taking earnings season into account, you know, the moving metals and moving Bitcoin high, you know, what's going to give us that another leg? What's going to boost us to 3,300, 3,350, 3,400 new all-time high in the market?
It's vaccine. That's it. I mean, you know, look, we all want to pretend that a lot of these things are being driven by the market, but at the same time, you know, the government, here we've got another round of stimulus. The government's been throwing money at a viral problem, right? And really what the market really wants to know is if the virus is solved, they don't care about the money as much. And obviously that's been what's been happening in the dollar as well. So I think your next big leg, if you're going to see one higher, is we're going to get some sort of breakthrough. And by all intents and purposes, it looks as though we're doing very, very well on that front. I mean, things are happening faster than I've ever seen in my entire life when it comes to the medicine and the money and the might behind getting something solved here. So, yeah, we're going to have to see some very positive news on the vaccine front, and maybe some even more positive news on just the average everyday news that you get beat up with when you get out of bed in the morning. And I think that's the other leg higher. So watch what happens. I mean, every time we get a whiff of a vaccine, you see a nice run higher. And then we come back down to earth. But if we can get something solidified when it comes to vaccine, that's what you're going to see. You'll that's your next leg.
Well, I mean, we kind of got that this morning a little bit. Moderna started their phase 3 trial of their vaccine candidate. So we almost have every other day we have the vaccine headline, and we have one today. So, you know, keep that in mind.
Yeah, well, I mean, and at times those headlines can wear off too, and then people can get, you know, lulled to sleep. Right. And then all of a sudden, like, wait, I can't believe I just missed that, right? Because you hear about it so often that you start to ignore it.
What are your thoughts about the stay-at-home stocks and the stay-at-home trade? And we look at the Zoom and we look at Teladoc. Teladoc just kind of trading along with them. But you look at all these stocks, and obviously the gamers are involved in that. A lot of the tech stocks are involved in that. Zoom's probably the best example here, where they really got excited beginning of July. And a lot of these, you know, they had to own them. And they've kind of not made new highs in the last 2.5 weeks. And the tech stocks really included in that, because the QQQ did not make a new high in the recent move, although it tried. Do you think the tech is a crowded trade? And if all of a sudden we do get positive news on the vaccine front, that tech could actually underperform?
Yes, I do. I think it's been part of the Tina trade up till now. There have been some great ideas and some, you know, look, I was there for 9/11. I remember being on a plane the first day you could fly, and I remember everybody saying that air travel will never be the same, and no one's ever going to buy a condo 80 stories high again. And you know what? It changed, you know, for a few months, but boy, oh boy, we got back to normal very quickly. I'm wrestling with myself about how long it takes to get back to normal here, because I'm not sure. It's definitely not like 9/11. This is going to take a long time. So those stay-at-home things, the things that you mentioned, are really going to have a big part of the way forward here. So you can't just say this is going to be a flash in the pan like we had at 9/11. I mean, look, when do we get to take the masks off? when do we get to use cash again?
We're leaking here in the S&Ps. I don't know. Did we get any data? We had that durable goods data, folks, but not what you want to see here in the pre-market. Hit 2375, pulling back. I don't know. The high for the day may be in here, folks. We're leaking. Sorry about that. I just wanted to throw in that quick comment. Go ahead.
You bring up another good point. I mean, come on. I think the economy is nowhere near as good as people think it is. We got bad jobs number last week. I think we stopped that downtrend. And as long as the government will only allow these businesses to be open to 25 to 50% of their customers, which means 25 to 50% of your revenues, but you're still expected to pay 100% of your revenue, you're just going to go out of business slower. Right? That's all. Too. And I can't stand the fact that that's even a thing. Okay. So now we've got all these businesses that have taken all these loans and are going to be around a little longer before they finally go under. I think, we've got a pop in housing, which I can't believe, but we do. And I think that some of these businesses that are still hanging on, I know a lot of guys out there that are going to give it 6-8 weeks. And if they can't make it go, they're not going to make it go. But they say to me, they can't make it go for sure on 25 to 50% of their revenues. So if we can't fill a stadium, we can't fill a theater, we can't fill a bus or a subway or a restaurant or a bar, how does anybody in their right mind think we're getting anywhere near back to 100%? You have to keep that in your mind. So these numbers, I'm telling you, this is an aircraft carrier of bad news. They will slowly but surely keep coming your way all year long. And when we finally do get maybe a vaccine, or we do kind of wear ourselves out of this good news, we're going to have a day of reckoning where we can't say that, look, 5 stocks out of the S&P 500 can continue to take us higher.
What about the eyeball test? I mean, and also, you talk to people. I talked to a couple of people in this weekend, and one guy works, in the lawn maintenance industry, and he's like, I can't get supplies. I can't get the supplies that I need to treat people's yards and stuff. And then also, and I don't even know if this is true, but Diet Coke. Have you heard it's hard to get Diet Coke? Have you been? I've looked at a couple different stores.
What?
And yeah, I looked at it. And also for me, like another thing that's kind of a little bit disturbing to me is I have gone to my Walgreens. I've been to a couple different Walgreens pharmacies and different places in Michigan. And when do you ever see empty shelves in a Walgreens?
Never.
Never.
Yeah.
And I asked a couple of the store managers, and well, first of all, they're like school supplies, right? So who's buying school supplies, right? If you're gonna, all you need is a computer, so no one's gonna be buying rulers and crayons and stuff like that. But it was like other stuff, and they said, one of the managers told me is like, we can't get the stuff, we can't get it, and I'm like, holy moly! It wasn't the toilet paper, it wasn't stuff like that, just like common everyday stuff. How often do you use like the eyeball test? I mean, I know you're a technician, I know you like the fundamentals, but how the eyeball test, how often do you
All the
implement
time.
that?
That's very, very important to me. I absolutely think that'll start to, all of a sudden we have a coin shortage. I mean, when did that happen? I mean, there are so many things out there that don't make sense to me. And again, we the same, who in the right, I mean, look, I love Larry Kudlow, don't get me wrong, but who in their right mind was sitting at the table that said, we're going to let these businesses reopen, they have to pay 100% of their overheads, but they're only allowed to have 25 to 50% of their revenues, when they could barely make it on 90% of their revenues? I just don't understand. And so you're not allowed to ask the question because people poo-poo you and tell you to shut up and go away. We're in the midst of a V-shaped recovery. And I'm like, I don't think we're in the midst of a recovery. Yes, we had a big bounce back with jobs, but now you're going to start to see that this is a stab wound that nobody knows how deep it goes. That's the bottom line. And to your point, your Walgreens and CVS anecdotal evidence, the things that I see are very important now. And I can see why you're going to go into those stock things, because look, going forward, this technology is going to be obviously even more ever present in the way we do our business and go about it. I mean, look, I went to Chicago last week twice to do some TV hits. I was embarrassed. I haven't been there in 6 months. Boarded up windows, nobody around. If it wasn't for a couple, 3 tourists, the place was empty. Now, think about the knock-on effect of that. You go into these big, high-rise buildings, and there used to be 7 or 10 sandwich and beer joints on the, concourse ground level, maybe below. They're all shut. You can only have 4 people to an elevator. Now, tell me, if we go back to some sort of semblance of normalcy, how many hours is it going to take you to get up to the 90th floor of the Sears Tower if they're only letting 4 people on at a time? I mean,
it takes long enough as is.
Yeah, right. You got to.
Everybody's gonna be really fit when we walk on the stairs.
Exactly. We've got some big bruises, and those bruises aren't coming in the face, and like an aircraft carrier that's just going slowly across that ocean. It's not stopping, and you're going to get these bankruptcy news. You've heard them every week. We have a big new bankruptcy or somebody restructuring or whatever. We're continually get this bad news, and we're going to have to pay the piper. I just don't know when.
Scott, I want to just make one more point, and it's to your point. Helen Meisler is tweeting this out, source of Thomson Reuters, and they were looking at insider transaction ratios, looking at the ratio of insider sells to insider buys. It typically runs between 12 and 20. So it's always a lot more sells than buys, because insiders sell for multiple reasons. They only buy because they think their stock's going up. So what this is coming from Thomson Reuters is saying anything below 12 to 1 is usually bullish, anything over 20 to 1 is bearish. In July, the ratio was 44 to 1, which is as high as it's been in a long, long time. Meaning insiders are selling way more than they're buying in normal times, and to the tune of like 44 versus 12 or 15 times. So an unbelievable amount of insider transactions happening on the sell side.
And here's where you guys are going to become valuable to your viewers. There will be a day of reckoning, and we will see some of this correction, and it's not anything to be afraid of. It's going to be a massive opportunity, but you're going to be able to see a lot this movement out of some of these tech stocks that have really been overpriced, like Nikola being worth more than GM. I think I heard you say before we went on. But you're going to have great opportunities, and to listen to guys like you, because there's going to be some really good stocks on sale cheaply that are just getting caught up in that washout of those big 5 or 10 stocks that are really leading the market around by the nose. And that's going to be the real big time to take advantage of a lot of different things, because that's what I'm looking to. Because right now it's tough. It's tough to get on board something that's already had the move like gold that it's had or Tesla that it's had. It's really tough to even get short some of that stuff because there's a lot of dead shorts lying on the road right now from Tesla. So you need to have a little bit of a the water needs to get a little muddied up here in this pond before you're going to start to see the big opportunities, because right now it's getting a little bit harder and harder as we get to that precipice.
All right, Scott, last one here. So from what it sounds like, in a few weeks, we'll all be getting another $1,200 check from the government. What should I do with that money? Where should I put that money?
That's a great question. Well, I mean, if you want to turn it into, $800 real quick, you probably could buy some of these stocks. But again, I don't think money is going to be the answer. We're throwing money at at the end of the day, this is not going to be over until I see a 75-year-old couple celebrate their 50th wedding anniversary in a Chinese restaurant. Okay. That's when it's over. And until that happens, this market has battered and bruised. The American trading psyche and the American psyche is so battered that this is going to be very difficult. So I would say, wait, cash could be, cash is an asset class. Yes. Right? Just because you're not putting it in something doesn't mean it's not doing. So I would say, if you've got other stuff invested elsewhere, that's not a bad thing to put in the bank and just wait for a rainy day.
All right, Scott Shellady, aka the Cow Guy. He's founder of the Cow Group. We love his insights. Chat loves you also, Scott. Thanks for the time, and keep on staying safe wherever you are.
All right, man. See ya.
Thanks, Scott.
All right. Yeah, that was really, really good stuff there from Scott. Really good stuff. All right.
Your catalyst for the sell-off, Joel. Trump's national security advisor, Robert O'Brien, has tested positive for coronavirus. So that's why we sold off those 5-6 handles there, because that was kind of coincides. The White House came out and said that. So that coincides with that little bit of sell-off there.
Thank you.
That we saw in the S&P about 10 minutes ago.
Okay, wow.
Now, so it's again the virus, nervousness about the virus. But Scott making good points. A lot of these points, like we've been talking about on the show, is you've got the lockdown stocks, you've got the tech stocks that have carried us, and if you look at the reopening plays, they really haven't participated. No. Are they going to participate if we get the vaccine? That we're getting positive news here again. But do you notice something else? Here's Moderna, positive vaccine news. The move a little more muted this time. You're not seeing Boeing rip up 5-6% because Moderna's going to the next phase. They're not getting the kind of moves they were getting before. And I mean, it is concerning.
Hey, Dennis, when you say positive news, all the news is that, hey, we're starting our trial. Like we're starting.
But if you gave us that news 2 weeks ago, we were ripping 300 Dow points on it.
Yeah.
And now we're not ripping like we were because we're getting so many of these headlines. The market's starting to become numb to them. So until we say, hey, we've got it, this is it, I think now the positive news on the trials is getting more numb. I mean, AstraZeneca, same story. Everybody ripping that higher last week, up to $65 because, oh yeah, positive data, we're going good here. And look at it now, back to 55. I'll tell you, I actually bought AstraZeneca on Friday, one of the only stocks that I bought, because it's back to where it broke out from. And you're looking at it pricing in almost nothing now, because we were back in May, June, when they were just kind of starting, the thoughts of, the vaccine trials and stuff. We're back to those levels again. So, so now you have like kind of almost the Pfizer deal where you get the wild card, where there will be some more positive vaccine headlines coming from AstraZeneca, which could drive it higher. So I bought the stock in the low 55s on Friday, put in the long-term investment account, not a trade, because one, I like the company. I've always liked the company, and two, it's got the wild card of the vaccine. But with that being said, the market is becoming more numb to some of these pops, so that's concerning as well. And what our original point was is the major concern is Boeing's not going up with the overall market. It wasn't going up. American Airlines is sitting right down here near the lows. Delta not rallying. Some of the banks rallied, Wells Fargo. So the banks are showing some life, but you are seeing a little bit of separation. Some money coming out of tech, some going into a little bit of value, but it's selective again. Coles, every time it gets a pop up a little bit, it's met with more sellers. There's a reason for that. And a lot of the points that Scott was just making is the reasons for that. That, hey, even if these stores reopen, they're not going to be opening at 100% capacity probably right off the hop. I mean, I don't know what it's like in Canada, but you go in the grocery store, we're a little more strict in Ontario, but you've got to line up and they only let so many people in the store at one time.
How we are down here.
What's that?
We don't do lines down here. We just
yeah. So but I mean, at a certain point, and Trump is now loosened up. Trump was against masks. I mean, for the most part, he was refusing to wear it, because he didn't want to show weakness here. He's starting to lighten up and look at the masks. And I mean, if you look at the other countries, how they got under control, it was with social distancing and it was with masks. And until you start to see mass adoption of that across the United States, it's hard to get the virus under control. Ontario's got in control. They have strict rules. I mean, now we set on July 20th in almost every major city in Ontario, there is a policy. You have to wear a mask in an enclosed public place. You go into the grocery store, you have to wear a mask or you're not allowed in the grocery store. And it's being enforced. So, and I watched a video of somebody getting taken out of a Tim Hortons because they were refusing. And
Did you
the police
see
escorted them out.
A Delta flight out of Detroit had to come back. It was going to Atlanta, and some people refused to put a mask on, so they brought the flight back.
Oh, that sucks for everybody else on the plane, though,
yeah,
too.
Yeah.
But I mean, the masks is an inconvenience, and some people are saying, "Oh, it's my health." And if you have, a breathing issue or something, you've got to know from the doctor. That's a different story. But I think for 99% of people, I mean, you have asthma, Spencer. Are you going to be impacted by wearing a mask by going to the store for 5 minutes?
No.
Is that going to impact your breathing?
No, and if it would, I wouldn't be outside in the first place. I wouldn't be in the store. So no, it doesn't.
It's the way out. It is the way out. It's the way that you can flatten the curve and start to get ahead of it without the vaccine. I've been a proponent for masks all along. I go out, I do wear a mask.
Hey, while we're on
I'm not going to tell everybody what I'm not sitting here telling you, but I'm telling everybody wore masks, we'd have a lot less spread.
Hey, while we're on the topic of masks, you want to just look at like APT and Lake, because they've both quietly been, these are your mask producers, and they've been moving higher steadily.
I mean, there's reason for that too. They're producing the protective equipment that we're in need of. Now, there's a lot of other companies producing it, so they have competition, which is why these stocks, haven't exploded, out of the gate to triple, quadruple, because there is that competition aspect of it. But they're not going down either. I mean, masks, I don't think are going away anytime soon. If you look over in China, and obviously even in Japan, so I went to Japan 7-8 years ago. There are people that wear masks all the time just because they've been hit.
It's part of the culture.
It's part of the culture.
Yep.
So is masks, that's a question. Is masks going to eventually become, if it's not already becoming part of the culture in North America, that there's going to be some people wearing masks? I mean, if you saw a person wearing a mask before January outside, you'd think, what the hell's wrong with them in North America? In Japan or in China, that's just, there's some people that just wear masks all the time because they've had, outbreaks before and they're being cautious. So has it become part of the culture? If it does, it's good news for APT and LAKE.
Yeah, so keep those names on your radar if you want to play this mask trade. 9 o'clock here. Can we just do one more? Can we just look at Amazon real fast? Someone in the chat asked about Amazon a while ago. Cooled off with the rest of the big tech trade. Although, and like we said, they do have earnings this week. I don't know. Thoughts, Joel?
Up 55 stakes here this morning. I'll just go simple on this one. Really, nothing fancy. 33.44. I believe that's your all-time high, right? 33.44.29. You had a nice break down to 28.88. Boy, this thing really moves around.
Moves to 100, 200 points.
Yeah.
The ranges are, the range on Friday was 250 points. Yeah. No, 150 points. Sorry, it was 150 points.
Yeah, that was kind of quiet. So you had a 550 point move. Half of that is 278, and you add that to 288. I mean, 3166 or anywhere near that. Okay. I would say drift up there, 3166 ahead of the print, getting back half of that. I'd say that's going to be good resistance now. I mean, I know that's only 100 points away, but if you're looking to lighten up into the header report, I also see a high there at 3150. That's your 3-day high, so that nice confluence in that area. If you come down, you take out this low at 2888. I mean, there's some good room here down to 2800 and below. But just looking at this thing and looking at the S&Ps, I mean, until we breach 3190, I don't know if we're ever going to do it. These are the big boys. These are the hot rods. These are the ones that are going to stay in an uptrend.
Yeah, there's definitely still an uptrend here, and I mean this Amazon number is going to be impressive.
It's gonna be
telling
huge.
you, it's gonna be impressive. They're gonna blow the numbers away. The question is it a Tesla aspect where they blow the numbers away and they hit the stock anyways? I don't know. I'm staying long Amazon in my investment portfolio for the simple reason is that I think Amazon is just going to continue to fire on all cylinders for a long, long time. In the short term, if you're like in this for a trade, you're selling into the pop because it did break down through 3,000. Maybe you don't want to hold it through earnings. If you're not intending on holding it through earnings, I'd be selling it into the pop today. If you are intending on holding through earnings, I'm not going to argue. I'm holding it through earnings. It might get hit afterwards, but I still think when I look at Amazon 3, 4, 5 years from now, they're going to be selling more stuff. There's just people are just buying stuff. There's new shoppers that have come online for the first time and saying, wow, this is awesome. Stuff gets delivered right to my door. Amazon's just not going away.
Although they did say that Prime Day is delayed, right? So it's not going to be in July this year.
Normally, so they're not going to have that big
well, actually, normally we would have had it by now. But in any case, as a reminder, we've got the CEO of Nikola, Mark Russell, on the show tomorrow at 9. If you have any questions for us, for him, send us an email, premarket@benzinga.com. Also, don't forget to like our video, subscribe to our channel. We appreciate that. Thank you very much, Coin Collector in the chat, for that super chat. We appreciate any and all donations. That's all I got. You can catch a replay of our show on YouTube or catch our podcast on whatever podcast platform you prefer. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Catch if you want to buy any Benzinga swag, the link to our Shopify store is in the description of this video as well. Everyone have a great rest of your Monday. Joel and I will be back at 3:40 Eastern time. In the meantime, have a great rest of your day and stay safe.